maybe they're listening right now and they're thinking, well, that probably doesn't apply to me. One of the things I want you to answer on that, what the typical is, what kind of loan do they have to have right now to qualify? Do they have to have a Fannie Mae or Freddie Mac or a FHA or VA, or what are some of those specifications?
None of that applies. It's just that it has to be a bank. The only program that would not apply is a private lender.
Okay.
So your loan must be with an institutional lender.
Yes.
So our broker that was on last week, Carolyn, any of her programs would probably work because she doesn't have private money.
That again, the program is designed for institutional first mortgages, so it does not cover your second mortgage. If you happen to have a first mortgage and a second mortgage, and you're paying your first but you can't afford your second, it will not assist you. However, if you would otherwise qualify on the first, then you can maybe start paying your second and let the hardest hit pay your first. Is that correct, Kim?
That is correct.
Okay. And then the other part as to the type of loan, the only requirement is that it be an institutional lender. So it doesn't have to be a bank per se. It can be a finance company. It can be a variety of types of lenders as long as they are regulated, governed lenders. So if you purchased your home from the seller, what we call seller financing, then in that scenario, the Florida Hardest Hit Fund will not pay this private person seller. But we're finding that most of the people, that's not their circumstances, and that's not one of the criteria that seems to eliminate them the most.
Well, when we hear a government financed or a government loan or government assistance, right off the bat, most people put the flags on the field. They think, oh my gosh, I'll never qualify for it because they've got such tight little niches that you have to fill. You've got to be a certain person or a certain length of time, and I'll never qualify. They're fairly loose qualifications. It's not really tight. Could you tell us a couple of the qualifications, Kim?
Well, the first one is that you have to be unemployed or underemployed by 10% reduction of income through no fault of your own. That's like the main key thing. Then there's the 3 Ds, divorce, death, and disability, and there's guidelines which are a hardship that they would qualify as well. So an example, husband and wife are on the loan. The husband passes away, and he was the main breadwinner. She still has her same job. There's not been a change in her, but due to the death, it created the hardship, so we're able to help.
Right. I will say that the program has been around since April of 2011, and it has gone through 2 or 3 different major metamorphoses. The first took place in the summer of 2012, where they expanded the program from 6 months of mortgage assistance to 12 months of mortgage assistance. And then subsequently, they went to making 100% of the payment. When the program first started, you had to contribute a portion of your income to your mortgage, and now you no longer do. Then the most recent change, which is what Kim just alluded to, it used to be the 3 Ds did not qualify. So your hardship had to be unemployed or underemployed through no fault of your own, and that applies and still does apply to the borrower. So it can be, if you have a husband and wife and they're both borrowers, they both signed on the promissory note, then it could be either of them who has experienced a hardship. However, if you have a husband and wife and we use the wife's credit so she's the borrower, and then the husband loses his job but she doesn't lose hers, that would not qualify because the borrower has not had a hardship, notwithstanding that the spouse has. But so the hardship, whatever it may be, has to happen to the borrower. But again, if you have 2 borrowers, it can be only one of them. Now, when they expanded the program to include death, disability, and divorce, that was a wonderful expansion, because that meant if somebody had passed away, it used to be that would not qualify, and now it does. And likewise, if you have a disability, so you can no longer earn your income. The philosophy behind it is it used to be intended to be a temporary, or it still is, a temporary assistance program. We're helping you. You've lost your job due to the economy. We're going to help you make your mortgage payments until you recover from that loss and can start making your payments yourself. So philosophically, if somebody passes away, they're not going to recover from that, at least not today's world. So but they have expanded it to recognize that is a hardship to their surviving spouse, and therefore they will now provide that assistance.
So at least it would bring them up to date if they were even up to a year behind, as long as it meant that $18,000 minimum.
$18,000 reinstatement. And again, if they have the ability to make their mortgage payment, then they can get up to $25,000 up of reinstatement. But if they need the mortgage assistance, then it's 18 plus up to the 24. Now, the other significant criteria, and Kim, I'll let you elaborate, but it's the 31% rule. So you want to tell them about the 31%?
Well, the 31% is where we will take your housing expenses. Although we will only assist with the first mortgage, we still account for a first, a second mortgage, and if it's not escrowed, taxes, insurance, and homeowner association. And we will add all that together for what your monthly housing cost is. Then we take your income and we take that gross monthly income times 31%. And you take your 31% of your income, and if your gross monthly income is more than what your housing costs are, you don't qualify. But if it is less, then you do qualify.
Right. So that's one of the main criteria. Again, for people who are unemployed, then typically that's not a strong criteria. If you're making no money, then obviously any expense is more than 31%. But for those who might be receiving Social Security, they're working, but they're receiving some form of other income or whatnot. Or again, it's a husband and wife. They do take Kim, do they count the household income or just the borrower's income?
Now, that's a new thing they just recently changed to, that now we count only the borrower and co-borrower income.
Okay, so that's a substantial change that will open up the eligibility. What has happened over the last 5 years is, I think, the government expected to blow through the state government expected to blow through the federal funds in a relatively short amount of time because, again, free money, we expected the citizens to take advantage of it. But because it was so poorly advertised, it's not that people aren't taking advantage of it and it's a wonderful program, but because nobody knows about it, the government has not spent all the money they had allocated, so they're expanding the program to assist more people. And it's wonderful to see because, as Kim says, when we help somebody, the relief that, wow, now I can actually work on getting a job and not struggling to pay and worry about losing my home. So it's really, really been great to help with these folks. So the 31%, just to put the numbers on the table, it's easier. If you make $1,000 gross income, if your mortgage payment, your total housing expenses, not just your mortgage payment, but it could be a second mortgage, homeowners association, condo association. So your total housing debt is over $311, that's over 31%, then you are deemed to need assistance. If your total housing expense is under that $310, I'm not sure what the tie goes, so that's why I use 309, then you're deemed to be able to afford your mortgage. Again, the goal is to help for those who cannot afford their mortgage. So if even with the unemployment, if the spouse's income is adequate or some other sources of income are adequate, then you're not in need, and that's great. If you don't have a hardship, we're happy for you. But if you need the hardship, then the government can step in and help pay.
I know, Jonathan, you gave out the website, and let's go ahead and give out that website and your number as well to program into the website.
Again, Lack and Lack Chartered attorneys at law are merely advisors to the program for this conversation, but we can be reached at area code 321-953-5115 and ask for Kim Steele because she's our expert in this matter, though I'm always happy to speak with you as well. And you can find us on the web at lacklaw.com. That's LACKLAW.com. And on the website, we have a link to the Florida Hardest Hit Fund and our referral code. Should you apply online, the referral code is 69032. And if you want to go directly, it's flhardesthithelp.org. And that's the government website that will answer all of your questions as well.
But if you get to that website and it looks maybe like you just don't know where to start or what to do, can I call you, Kim, and let you have you walk them through a couple things or talk to you on the phone?
They can. And we also have the ability to go on the site ourselves, and we can input it for them. We can help them over the phone, or they can come to our office, and we can make the application with them right there.
And it's Kim Steele. You want to give out the number that they can reach you at?
It's the same number that John just gave.
Okay.
That's 321.
321-953-5115.
And it's not as difficult as we might have made it sound because there was a lot of things we were throwing out there. It is something that you need to look into if, in fact, because, 10% under what you've been making is not a substantial decrease, and you can qualify for it.
Absolutely. Again, the program, when we started back in 2011, sadly, it was probably a 15 to 20% people qualified. So we were sending out ineligible letters, much more than eligible. Then they tweaked it and it got closer to 50-50. But the most recent adjustments where they've made a few changes to the program, I'd say we're probably 70-30, 75-25. In other words, we have a high, it's not 90%, but a large percentage of the people qualify, certainly well over 50%. So again, there's no cost to apply. It'll take a little bit of time to get your pay stubs together, your bank statements, but it's not that much information that you need to provide. And with that information, we can determine whether you qualify. And if you don't, you wasted a little time. And it cost you no money. If you do, you just bought yourself a lot of relief as your mortgage gets paid for you while you work on improving your life circumstances.
Exactly. So if you're unemployed, it's a wonderful thing. Underemployed, when I was just doing some figures here, if you're making $60,000 a year, all you have to be making now is $54,000. Technically, that's 10% less to qualify for this, right? Are there any maximum on how much you could be making a year?
Well, you bring up a good point, and Kim, I'll throw that at you. There are other eligibility criteria we have not discussed, so we can throw some of those out here, and one of them is the AMI. Kim, you want to grab that? The maximum income they can have for.
But that's something that hopefully everyone listening will just call in so I can tell them, because it's based on county to county and number of people and the 140% income median.
Okay,
that's
yeah.
Right.
We're not throwing out an exact number, but the criteria is 140% of the area median income. So what the government publishes every year by county or by area in some cases, but by county, what the average or median income for that area is. And it's based on household size as well. So you can be making no more than 140% of your area. So that number does vary by area. That's why Kim doesn't want to throw out a number there, but it is, but for the most part, again, 140% of the area, that means you're doing fairly well. There is also a limit of the first mortgage balance of $400,000. So this is only designed to help those whose first mortgage current principal balance is under $400,000 is one of the other criteria. And unfortunately, there's a bunch more of eligibility criteria, but I won't say, some people get disqualified for one or another of them, but feel free to give Kim Steele a call at Lack and Lack Chartered, 321-953-5115, and she can talk you through all of the information and all the way through the application.
Right. For just a few minutes on the phone, you can find out before you get into the website. Go ahead, Kim.
John, I also wanted to point out, I have found over the years and still to date that a lot of people still are eerie of the fact that it is free for them to apply and that they're not taking out a loan. They get very scared to go on when they do hear about it. And so it's important for them to understand that it is no cost for them to check in to see if they qualify.
We really appreciate you coming on the line, Kim. We have just a few more seconds. And again, I want to thank Kim Steele with Lack and Lack Chartered, and Jonathan Lack, who's wearing three hats, Lack and Lack Chartered, Waterview Realty, Waterview Title, for coming on and talking about the Florida's Hardest Hit program. Thank you so much, Jonathan, for explaining that. We hope those of you that are listening that will take advantage of this situation and also share that information with your neighbors, your friends, that there is some relief out there for you. Thank you again, Jonathan, and thank you for joining us. today on Your Hometown Solutions, where we